Hi there, it's Bill with Smart Trades. It's July 13th around 10:15 a.m. Pacific time, and I've got a lot of ground to cover, so I'm going to jump right in. If you need greater detail or quicker reports, more frequent reports, please go to smarttrades.com. Um, at any rate, here's the S&P Cash weekly chart. I originally posted this particular chart, I believe, in mid-June. I was talking about the triangle starting out in late May. At any rate, this is the general pattern that I was looking for, for the past 6 weeks or so. Here's the update into today, and as you can see, we're still pretty much hitting on all cylinders on the triangle. Here's a little more detail. This chart actually was posted on my report yesterday. And again, if you look at the triangle, it's playing out. This is a daily chart as opposed to weekly. And you can see again that A, B, C, D, E pattern unfolding. And ideally, we're going to go down and test perhaps the 1270 area. But, we shall see. As is the case always, I try to take this one step at a time and confirm the shorter term patterns are in sync with our longer term scenario. And in fact, this is a chart that I posted in real time as we approached that 89% target around 1358. We actually got to 1356.50 about, and as you can see, we had a five-wave structure with an internal five-wave structure as well in a 5 of 5 type scenario. As we hit that 1356.50 area, just shy of that 89% retracement. And the 1358 area. And from there, this chart isn't quite up to date. We actually have 5 waves down now. We have a bullish divergence. And as I posted on Twitter and in my report yesterday, I was looking for a short-term bounce, which we are getting today. This is the iShares FTSE China 25 index. And a lot of folks are saying that the Chinese market has broken down. I don't necessarily believe that. If you look at it from 2009, we really have a sideways pattern with clearly corrective internals. Here's a closer look at the weekly chart coming off of the 2010 high. And from there you can see this ABC pattern. Could we go a little bit lower? Certainly. Could this evolve into something else? Yes, it could. But for now, I think most of the evidence shows that this pattern is actually corrective, as I say, from late 2009 and also from late 2010. That's obviously supportive to the U.S. stock market as well. I don't think we're going to be crashing if the Chinese market is going sideways to higher. Long-term dollar index. I've actually posted this chart several times in the past, starting several months back. A lot of folks are looking at this as an impulse wave up off of the 2008 lows. I think clearly if you have an open mind and you look at the bigger picture, where it's possible to count this as an impulse up, I think it better counts as an ABC pattern up. The implications of that are that rally is probably A, that the decline we're in now is a B wave, and that ultimately it's going to get resolved with a C wave up. Now, assuming that we do hold somewhere near the 70-72 area on the next leg down, an A equals C scenario is going to take us up into that 90-92 area, and that's also a previous resistance area going back to 2004, 2005, and again, it would take out the 2009 highs and give us a nice long-term ABC pattern. C waves can go higher than that, obviously, but for now, and this is a pattern that's probably going to play out over the next several years, so we've got a lot of time to reevaluate. But the next step, obviously, is to see if indeed we hold down at the bottom of this channel. And again, that comes in around that 70 to 72 area. And obviously, if we start breaking out, the C wave could already be finished, although C wave should have a 5-wave structure. In this case, it looks like a wedge. And so ideally we will have another trip to the downside down to 70, 72 or so. The Euro FX, just a mirror image of the dollar. This is the shorter term chart. This is a daily chart of the euro, and it too looks like a corrective decline. It looks like higher prices are probable, and basically this is has taken the form of a bull flag or an Elliott ABC, whichever you prefer. It's 6 of one, half a dozen of the other. Bond market. The bond surprised me by making a new high, but the overall pattern is still consistent with this channel. We tested the top of the channel almost to the tick. You'll notice that the 20-year TLT did not make a new high. And I think that the bigger message here is that, off of the top of this channel, the bond should be sideways to lower within this channel. This ABC up very well could be part of an even larger corrective pattern. I'm not sure of the exact context longer term. Crude oil, again, you'll remember I had a target around 90. So far, so good. It's held there. It looks like a fairly impulsive rally. And as I noted to my clients yesterday, the probability is sideways to higher prices in crude oil over the intermediate term. Natural gas completed what appears to be a 5-wave structure down. And again, yesterday I posted this chart and with the idea that we're probably going to get a bounce, at least to some extent, perhaps up to this previous fourth wave. It's not entirely impossible that this is an intermediate term low. It's around 406. And again, that 5-wave structure down is generally a terminal pattern. The exact context of the longer term pattern remains to be seen. But this is one of the beauties of Elliott. It gives you, a framework to look at, and in this case, we have a possible low. Gold. This is the chart I posted yesterday, and gold actually fooled me a bit here. It did go through the top of this channel, and nonetheless, I still am of a mind that this is an A, B, and perhaps C pattern. We shall see. Here's an update through today. If you adjust that top of that channel to the highest close, we come up just about where we are on today's high so far. So we shall see. I'm a little less than certain this rally is somewhat impulsive, and as you can see here in the 240-minute chart. That said, if this is a C wave, that would actually make sense. So you'd have A down and then an A, B, C 5-wave structure to the top of B. Again, let's back up just a bit here. A, B, and then perhaps a C wave down. Okay, silver. Silver in a channel a lot weaker than gold, both on a short-term basis and a long-term basis. It did rally on a percentage basis a little bit more today, but I think in terms of the big picture, this pattern is still intact. Certainly a rally to the top of the channel is possible, even probable. And here's the labeling of that. You have an impulse wave, a clear 5-wave structure down, and from there what appears to be an evolving corrective rally A, B, C back up. It's certainly possible that we could go through the top of that channel a bit, but just as the bond market did. That said, I think that clearly the decline looks impulsive, so probabilities favor that this rally is corrective, and it should terminate up around 40 or so, but we're getting ahead of ourselves. Let's see how it unfolds. And copper. Very important, I think, to the long-term picture to look at copper. Clearly the decline in copper, it looks corrective. It looks like an ABC so far. Moreover, the uptrend channel is still intact. That bodes well for economic growth overall in spite of all the bad news out there. So, as always, we shall see, somewhat lower prices in the market are actually what I'm predicting here. So, that said, we certainly can go down a bit, but if you see copper still in an uptrend, chances are the market is also going to stay in an uptrend as well. And I posted this chart a long time ago, very long-term picture of the Dow. The Dow, this is not a complete chart. I'm not going all the way back into the 30s and so on. Most folks interpret the 1970s, 60s, 70s bear market as a wave 4. I think an alternative way to look at it is as a 1-2 and a series of 1-2s up, going all the way back to the 1400s. In that scenario, we are in a very large and very sideways fourth wave. There's a variety of ways that it could unfold. One is the expanding triangle scenario, which would actually take us to new highs before a large decline would take us back below the 2009 lows. So we'll see how it unfolds, but this is my long-term view, extremely long-term view of the stock market. And here's an alternative. We have a completed A down to the 2009 low, and that we're working on a very large B wave. And a C wave again would take us down below about Dow 6,000 or so before finally recovering. And again, in the grand scheme of things, this best counts as a big flat wave 4. One thing to consider too is if you look at like a 500-year CRB index, you'll notice that all the declines from 1400 through the 1932 low have been very deep, 1-2 type patterns. To me, that's an indication possibly that this next decline and the next series of declines are actually going to be, flatter fourth wave type patterns. As always, we shall see. There's a lot of time to adjust the count, and indeed, here's the big picture on the Dow. This is on a regular scale, not on a log scale chart. And indeed, you can see the magnitude of the ultimate decline is going to be quite significant. I think the debt crisis and European debt situation, as well as the U.S. Debt situation, obviously sooner or later there's going to be these bills to pay. So really the question is, when we pay those bills, is it going to be an end of the world type scenario, or is it going to be another 2009 type decline, perhaps even somewhat worse than that? And I tend to favor that it's going to be more of a replay of 2009 eventually. And as is the case with the dollar chart, these patterns are meant to play out over a period of years. Indeed, my projection, and I stated this actually probably more than a year ago, is that the C wave is actually going to bottom sometime around 2016. So, give this a little bit of time to play out, obviously. And as always, we'll take it one step at a time. So right now, let's, go back to that triangle and see how it plays out. But so far, so good on that. And again, if you'd like more frequent updates, please visit smarttrades.com. If you like the video, please, vote for it. Hit the like button. And you can also subscribe right here to the free service right on the YouTube subscription box. Anyway, thanks for watching. Hope you're having a great week and enjoying your summer. Thanks for watching. Bye-bye.